It was a brutal week for investors. AI stocks fell, IBM crashed, and one of the world's biggest IPOs is sinking. Let's break down the biggest market stories from this week and what could drive stocks in the days ahead. Let's start with a look at the major indices. Spoiler alert, nearly everything was bad. So the S&P, which is less tech heavy, was down just over 1%. NASDAQ 100, which is much more tech heavy, was down nearly 3%. Interestingly enough, FTSE 100 in the UK was up around 1%. This was largely driven by energy and utilities. Kospi, which is a Korean index, which is important in the AI world because a few of the companies in the index have high memory capabilities and capacities that they produce. They were down around 9% this week. And lastly, the Shanghai Composite, to show that all markets were affected, was down around 5% as well. Now, what drove that retraction was a few things. One, the Iran crisis continued, but also AI stocks got crushed. You can see here that chip stocks and other AI darlings once again were at the center of shaky trading. The voracious demand for computer memory and processor may be unsustainable. So we've talked about an AI bubble in the past, and the last few weeks have been pretty shaky. Maybe this is a bubble starting to pop, or maybe this is just a bit of a correction, somewhat healthy of letting air out. All right, so on to the major headlines this week. Let's start with Netflix, which had a relatively good last few years, but now they've had a very tough 2026. So they had their Q2 earnings, and despite revenue and earnings largely on par, the stock dropped around 10 to 12%. Really what's happened is they've seen a lot of traction slip. So there's been greater traction and competitive threats from TikTok and YouTube. The average viewing time is also down per user. So while the overall amount of viewing time was up, their user growth also increased, which brought down their average viewing time. They also lost a bid for Warner Brothers recently. Now there's a lot of competition with Paramount, who eventually won out. And funnily enough, actually Netflix had won the original offer, but some competitive back and forth between it and maybe some regulatory concerns. And actually being friends with the Trump administration, with Larry Ellison, helped them. But there is a growing concern that their library and their content is maybe not as fresh or has as much new material coming up to drive further engagement. So overall, Netflix feels a bit on the back foot. But if you do look at their share price, they do have these moments where they go up for maybe 18 to 24 months and they come back down. There's concerns that they're not growing. They might have a hit new show, or they might have new avenues that they then roll out to users, which then drives the stock back up. So it is a bit of a roller coaster. Now the question is, how deep will this go before you have to pick it up? I don't know, but it could be an interesting buying opportunity. I think they do need a new product. Now they are betting a lot more in podcasts and live entertainment, which I think is probably the right play, but those could be slow burns as well. And equally, there's a lot of competition, especially in live sports, from Amazon and YouTube and other providers. All right, big banks, even bigger earnings. America's 5 biggest banks generated a combined $49 billion in profit for just one quarter. JP Morgan Chase led the way with nearly $21 billion in quarterly profit, which was almost half of that. So they continue to be the most dominant investment bank in the United States. It'll be interesting to see what happens and who takes over from Jamie Dimon. And can they keep the momentum up? The biggest profits came from a few different areas, IPOs and merger. Nearly every bank was on the SpaceX IPO, the biggest IPO in the world. So they all got a piece of the pie there. Stocks and bond trading were also up, and investment banking fees. I do think the outlook for the rest of the year for the finance industry looks very strong. Volatility in trading is good for fees. So if stocks go up and down, often the banks do make fees. There are more IPOs planned, thinking about Anthropic and OpenAI if they go public this year. So this is not financial advice, but it might be worth taking a look into a finance tracking ETF. All right, the next is a story I love, which is about Europe on the rebound. Now, usually everything outside the US gets overlooked or ignored, but banks are starting to pay more attention to what's happening in the capital markets here in Europe. So Citigroup recently noted that European companies are receiving their strongest wave of earning upgrades since 2021. Why is this happening? Strong consumer demand and easing inflation, along with investors seeing Europe as a bit of a hedge against the United States, and companies have lower valuations but good momentum and good fundamentals as well. Where you're seeing the growth is often in more traditional industries, I will say, finance, industrials, defense. That is actually where Europe is not too badly placed. But it does feel like Europe is still competing in the old world. It does not have as many big tech or AI names, does not have a $1 trillion company in its own right. It does have ASML, which plays a key part in the AI value chain, but those are few and far between. So I hope they do have more tech companies that can help them be more competitive going forward. SpaceX crashes. They have had a horrible few weeks since their IPO. First of all, their stock fell 14% this week, and they're down 23% from their IPO price. They've lost nearly $1 trillion in market cap from their peak. There's a few reasons. They've taken on more debt, AI as a whole has slowed down, and maybe the revenue will not come to fruition as quickly as they realize. Unfortunately, this is a very predictable outcome for IPOs. There's often a big push and spike right out of the gate, and then they come back to reality soon after. I always think of Figma's IPO last year, which had a very good opening day, and then soon after has come down quite a bit since. Specifically, you think about it, SpaceX, which had the Musk factor involved promoting it out, and a very small float of around 5%. A lot of factors were coalescing to have a very good and a very good spike on day one. Unfortunately, that price has come back down to earth ever since. Now, the next big moment will be their earnings event, their first earnings event, that is, in early August, and we will see where SpaceX goes from there. Apple took over Nvidia to become the most valuable company in the world. Honestly, given they have no AI product or strategy, yeah, I know they have Apple Intelligence, but nobody cares or really takes it seriously. It is impressive to see their valuation growth and again to take on Nvidia and overcome them to become the most valuable company in the world. As this article notes, Apple was seen as a laggard in the AI race because it wasn't spending to develop models, but now sentiment has changed. Interestingly, they stuck to their core competency, making watches and phones and earbuds and really doubling down on that. So they were able to keep their CapEx spend down, which many of the other big tech companies weren't. And I think Apple will grow even further. They're set to launch their first foldable phone in September. Their iPhone 17 sales have done well. So they're in a good position to retain that top spot even further. IBM crashes. IBM just suffered its biggest stock crash in decades. Its shares plunged more than 25% in a single day. It had tens of billions wiped off of its valuation. It had been a meteoric rise the last 12 to 18 months for IBM. So they've done very well. Now, why did their stock come down so much in a day? Mainly because they had a weak Q2 earnings. They were very much a momentum-based stock the last 18 months. So the minute you miss in terms of growth, you're going to be penalized as such. Revenue came in at around 17.2 billion. The estimates were around 17.9 billion. So that delta, that difference, or that miss or under hit had a big impact on their stock price. And investors worry that IBM isn't capturing enough of this AI spending despite promoting its own AI strategy. And the main reason has been the last quarter, IBM's software and infrastructure divisions have largely underperformed. All right, here's what to watch for next week. Does the AI sell-off continue? Will the push on chip makers continue to be a drag on the overall market? How will the market react to Intel's earnings later this week? All to be determined. There's also a few big tech companies reporting, including Google and Tesla. And in the UK, there's two big things. One is UK jobs report and unemployment figures will come out this week, but also there's a new Prime Minister, Andy Burnham, set to come in on Monday. There's been no real mention of his cabinet. Yes, there's been a few rumors here and there, but nothing concrete. Also hasn't really worked too well with bankers in the city, which is not very good. We saw what happened with Liz Truss.